Guys, welcome back to the Forex Freakap. I'm very excited to be recording for the first time the Forex Freakap here in the office with all the gizmos like the new mic and the new table and all the stay lit baby, all the cool stuff. Very excited, pumped to be back. Anyway, let's talk about markets today. What did we see? Well, to be honest, the definitive trend, definitely for the European session, has been dollar weakness. So let's start by looking at the Dixie. This is the Dixie chart. I'm zooming in. This is today. So we started off overnight, just where the mouse is, crawling higher, and we were getting risk-off flows. And there were a couple of concerns, which I'll talk about more towards the end of the video. But around the time of the European Open, we have reversed, and we've pretty much been on the back foot for the whole day. Certainly, that downside in the dollar was accelerated from around just before the US cash open, which is at 2:30 London time, 8:30 Eastern time. And there was some news that drove that move. Okay, so it drove dollar lower. I'll just zoom in on stocks as well. If you see top left, that's the S&P 500. Drove that higher. European stocks drove them higher as well. You can see them at the top as well. What was the news? Well, it was optimism on a potential coronavirus treatment. Not a potential coronavirus treatment, it's more evidence that remdesivir, this drug that we've been talking about for a long time now, is actually working really well in reducing mortality. So, what was it? Gilead, the maker of remdesivir, they announced that their data on the drug was associated with an improvement in clinical recovery and a 62% reduction in the risk of mortality. 62% is a lot, guys. Because remember, what is it about this virus that makes it scary? It's the fact that it kills people. Because if this is just a virus that just makes you ill, there's loads of stuff out there that just makes you ill. But nobody wants to die, obviously. So the fact that if we can keep reducing the mortality of this virus, then that means that actually we don't need to worry so much about if this virus is out there. And potentially that means economies can go back to normal life even more, and that'll be good for the economic recovery, and that is good for risk assets. So that is why whenever you see optimism regarding a treatment for this virus, you're going to see upside in risk assets. And that's what we've been seeing in recent trade. But it's been a weird one for the dollar, because this improvement in risk appetite, yes, it's lifted stocks, and yes, it's hit the dollar, but if you look at FX, let's look at the G10 performance table on the day. I'll just zoom in a little bit. Here we go. Nice and big in the center of your screen. You can see dollar is near the bottom of the performance table here on the right. GBP, Euro, both doing well. But typically, when you see risk on flows, you would also see NZD, CAD, and Aussie doing well. But they're not doing well. And in fact, when you look right over to the left, JPY is actually the best performer on the day. So it's just shaping up to be a bit of a weird day for FX markets, to be honest. Because usually, like I say, when you see dollar weakness because of risk on, you see JPY, which is over here, all the way over here. And you see Aussie in the lead, and you see CAD in the lead, and NZD in the lead, and GBP and Euro, fine. But yeah, it's a weird one. Basically, all this dollar weakness has gone into GBP and Euro. So why is it that GBP and Euro are the ones that are strengthening? Well, remember this week we have talked about a couple of positive fundamental factors for both GBP and Euro. I'll just quickly recap them. For GBP, there was two things. The first one, some of those Brexit rumours about the EU potentially being ready to soften its position on fisheries. Number two, we had Rishi Sunak. He's the finance minister. He was announcing all those economic measures which GBP seemed to like, even though a lot of it was expected, but still GBP seemed to like his energy or something. Don't know what it was, but GBP liked it. Moving on to Euro, what have been the positives for Euro this week? Well, it's a bit of a weird one because obviously these EU 27 leaders are currently negotiating this EU recovery fund, which everyone wants the EU recovery fund because it's going to be good for the Eurozone economy and hence a positive for Euro. And we've got this meeting next Friday of EU 27 finance ministers. And in the run-up to that, it looks as though Euro is anticipating that a deal is going to be made at that meeting. It's like optimism that these EU 27 leaders are going to come together, make a deal on this big fiscal package, and and that'll be good for the Euro. And Euro seems to think that that is going to happen and happen well. So that, I think, is what we're seeing at the moment. So moving on then, why are NZD, CAD and Aussie not performing so well despite all this risk on? Well, this morning, guys, markets, as I was saying, were in a much more risk-off tone. Let's just go back to the Dixie. You can see this morning, where my mouse is, that's like 7, 8 a.m. London time, and Dixie had been climbing. Back then, before dollar was hit, there were a couple of negatives that we were talking about with the members. And these negatives, although dollar has reversed, these negatives still look like they are weighing on Aussie, Kiwi and CAD. So let's just quickly whisk through them. The first one, US coronavirus cases still rising at a record pace. Another 60,000 additional cases yesterday. But more concerningly, the death rate appears to be rising in the US as well. So 838 dead people yesterday, basically. Very, very sad. And it looks as though that death rate is going to continue to rise to reflect the rise in cases that we've seen in the last couple of weeks. That could spur more risk-off flows and weigh on risk assets like CAD, NZD, and AUD. Also, another thing that was weighing on sentiment overnight, this hit stocks. Stocks have now reversed, but like I say, risk FX still under pressure. Democratic presidential nominee Biden, who is, by the way, the strong favourite to win the presidential election, according to betting markets. Trump's only got like a 37% chance of winning, apparently. Obviously, we'll see. But anyway, Biden, the favourite to win, was making a speech on the economy, and he confirmed, as expected to be fair, but he confirmed that he is going to be raising corporation tax. Obviously, that's bad for stocks, it's just bad for risk assets, and a lot of people will say that such thing is bad for economic growth as well. And he also had a comment where it sounded a bit populist, like he's just trying to target his base, but he said the US... what did he say? Yeah, he pledged to end the era of shareholder capitalism. Big words there, end the era of shareholder capitalism. Obviously, people who own stocks, they are the shareholders. They're not going to like that. And markets in general, a bit nervous about these comments if this guy is going to be the future president. What else have we got going on? Trade tensions as well, okay? So, US and EU trade tensions have been in the spotlight today. What happened? So last night, the US basically said it was thinking about releasing a new tariff list against French imports worth around $500 million to 700 million, targeting stuff like French wine, cheese, handbags. Don't know why you target them, because all those things are great. But anyway, not good. We don't want to see the US hitting the European Union with more tariffs, because for people that want economic growth, such as people that are bullish on risk assets, you don't want to see tariffs, because tariffs are bad for growth. So when you get stories like this, threats of tariff from the US, and then obviously the EU today had to respond. So the French finance minister basically said, we will respond and we're not going to change our plans. It's not good for growth, guys, because it creates more uncertainty. And just whilst we're talking about trade tensions, US and China has been in the headlines as well. Although, to be fair, with US and China, we're not really talking about trade tensions at the moment because no one's talking about tariffs. It's about other things, okay? So the two main things at the moment that everyone's talking about is, number one, there's three things, excuse me. Number one, the US has been sanctioning these Chinese officials that are involved in the persecution of these Uyghur Muslims, and China doesn't like that, and they're bickering back with the US. Number two, Hong Kong, new national security laws. It's not just the US that's going against China from that, it's like most of the rest of the West, basically. And China doesn't like that as well, so this is another point of tension. And the other one is the geopolitical one. So China, just to fill you in, if you hadn't already heard about this theme, China has all these territorial claims in the South China Sea. Lots of other countries do as well, like Vietnam. But what China's started doing is building these artificial islands and building military bases on them to basically claim that territory. But the US, supported by a lot of the, Vietnam and a lot of these other local countries, has been sailing ships through the area to basically say, hang on a minute, this is international waters, this isn't yours, you can't claim it. But that's another point of tension. So all these things have been in the headlines, and all weighing on sentiment in general. So, yeah. To be honest, guys, though we're seeing dollar getting slammed, stocks a little bit higher, as you can see, but the rest of FX is telling a different story. Aussie CAD at the bottom. Markets are cautious, guys. Last thing I just want to finish up with is quickly talking about why I think dollar has been getting hit. So you might hear some saying, oh, dollar's been getting hit today because of risk on. But like I said, like I've been saying, look at these risk currencies. They're not performing well. So what is it that's been hitting dollar then? If it's not risk, what is it that's been hitting dollar? Well, I think there's a couple of things that have been going on this week. I think one thing that's weighing on the dollar is the spread of coronavirus in the US. That's bad for the US economy, especially when you compare it to the European economy, which has been containing the virus much better. So that's not going to be good for the US dollar. Moreover, and kind of linked to that point, we've had quite a lot of Fed speak this week, such as Vice Chairman of the Fed, Clarida, and a couple of other members, basically reiterating the fact that they will do more and they are willing to do as much as necessary. Basically, they have super dovish tone, and also noting the risks to the economy that this second wave of coronavirus in the US faces. And I think those two things have definitely weighed on the dollar this week and may continue to weigh on the dollar next week, because if we continue to see this divergence between the US with their economy getting worse because of the virus and the Fed getting more dovish, whereas you see the ECB perhaps getting more optimistic because they've contained the virus well, I think you could see more dollar downside, and that means more euro dollar upside, potentially. We will see. Choppy markets at the moment, guys, so just be careful. You never know what's going to happen. But anyway, guys, I think I've chatted enough. That is pretty much it from me for now. I will see you next week for another Forex Freakap. Have a good one.